And now we're going to have Darrell Martin, folks, up, and we're going to be talking Nadex as we do each and every Wednesday at 20 past the second hour. Darrell's an expert on trading the Nadex products. Darrell, welcome to TFNN.
Hey, welcome. Thanks for having me.
Absolutely, man. Absolutely. So first off, tell us, and folks, you can come over to our website at TFNN, and you're going to see right on the front page, the couple banners, Nadex banners. You can hit those banners. You can test drive the actual platform. They'll put $25,000 of funny money in you, and Darrell's going to be giving us an education out here each and every week as to what these products are and when and how we're going to trade these products. So can we talk a little bit, Darrell, today about, first off, I guess, the S&P, we had it up, down, all over the place. And so talk to me about what, you could either do on a daily basis or a weekly basis, with something, with the kind of the volatility we had out here today.
Well, yeah, just like you said, I mean, we're having ups and downs and just massive movements. Apple was expected, of course, yesterday to have a poor earnings report after the Verizon and AT&T reported their lower than expected iPhone sales.
Yes.
And, of course, as you know, Apple came out with they just blew it out of the water.
Yes.
On their earnings announcement. Market shot up right after the close, the cash close there, and, sort of trailed up a little bit all night long. And, it's one of the things that's really challenging, of course, to trade sometimes in these, crazy markets right now, and the risk can be just huge because you get in and get stopped out 5 seconds later.
Right.
And, one of the things I do, I look, of course, what happened last night, what happened overnight, what's the expectation, what did the international markets do. But, market opens up, and I'm looking for trading opportunities. So this morning, of course, expecting the S&P 500 to rise based on Apple's earnings announcements, also expecting some other things to happen. The Fed Reserve announcements coming out. Everybody knows they're going to leave their rate at zero. They're going to be really wishy-washy about everything that they say, which Bernanke totally was, had nothing to say really today.
Yes, yes.
And, just expecting that, expecting the market to rise. At the same time, I mean, who knows? You could have Spain come out with another crisis or all of a sudden, some other country has some big issue. And so you really got to protect yourself. And, you want to trade, but you don't want to be stressed out in the process.
Okay.
And that's one of the things that I've loved. I've been trading for over 10 years, and I've never had a product like the Nadex Bull Spreads where I can hop in, I can place a trade, and I have no stress. And by meaning no stress, I mean, there's always risk anytime you place a trade.
Sure.
But my risk never grows. So I don't have to worry about, tick by tick, if it's moving against me, that I don't see my profit and loss, like going further and further and further down.
Yes.
I know what my maximum risk is the second I get in the trade.
Right. And what happens here, so can you walk the folks through exactly what a bull spread is?
Yeah, exactly. No problem. A bull spread, basically, I like to call them box spreads.
Okay.
So if you can just envision a box in your head, okay?
Yeah.
The left side of the box, that's when you start when you get in the trade.
Okay.
The right side of the box is either when the spread expires or when you get out of the trade.
Okay.
All right?
Yes.
And then what it has a floor and a ceiling. So, for example, this morning, if you want to go, long on the S&P 500, I don't care if you want to do, the ETFs or the futures or, however you want to trade it.
Right.
You could have, instead of using, ETFs or futures, you could have just bought 5 bull spreads, okay?
Yes.
And basically the way the bull spreads work is when you go in and you buy them, so if you went in this morning, you bought them, you get them for about $13.82, $13.83, right around the market open.
Okay, yes.
And the floor is at $13.80. So if you go in and you're buying them, and let's say you get filled at $13.82, okay?
Yes.
Then you have 2 points of risk. So on the S&P 500, that would come out basically, to obviously a very small risk, $100 risk.
Right.
All right? So 1382, and now there's a ceiling. Okay, now, by the way, again, 1380 is my maximum risk. So it doesn't matter if the S&P drops to 1370, 50, 40, I will not lose more than $100.
And that's huge.
And more importantly,
right?
I'm not out of the trade.
Right, right. So each trade, I'm sorry. So each trade, we're only talking $100. That's what he's talking, folks. Okay, this is pretty neat. Okay, go ahead. Go ahead. This is cool.
Yeah, literally $100 to place a trade. I mean, that's equivalent of basically putting like $60,000 on ETFs, or if let's say your reg team margin, it's $32,000 it costs you to trade the spiders.
Okay. Yes.
If you're trading, futures, I mean, anywhere between $400 and $5,000 in margin. Is what you're looking at, depending upon your broker.
Right.
So you're already at insane, 200-300 to 1 leverage. All right. And usually leverage, of course, should scare you if it's that high. Right?
Well, particularly because you got to put up more margin, right? In this case, you don't have to, though, right? Okay.
Exactly. And the margin you have to put up is your risk, okay?
Yeah,
so you're never worried about losing more than that. And the reason leverage is usually a double-edged sword is because yeah, you can make a whole lot when it goes up, but you can lose a whole lot when it goes down. But
Right.
this leverage with the bull spreads only has one sharp side, and that's the side going in your direction. Okay? So it can't cut you going down any further than that floor. And to me, one of the best parts is that floor is you're not stopped out. Okay?
Yeah, that's huge.
You're down, but you're not out.
Right.
So you hop in, it's 1382, 1385. All of a sudden the thing drops down to 1375. Again, you're down, you're not out. You have time till that spread expires, in this case, till the end of the market at 4:15 Eastern.
Sure.
You have till that time to be right.
Right. Well,
So-
in fact, just like today, at 1386, it comes down to 1380 and finishes at 1387. So yeah, right.
Exactly, yeah. So, I mean, you're nervous the entire time. You're like, man, am I giving this up? And, am I gonna lose? Should I move my stop? I mean, you're always wrestling with those things because you're trying to figure out where should your stop loss be so you don't get kicked out. You don't want your stops getting hunted.
Now
Well,
let me
does it
ask you this.
completely-
So we had like a couple points on the way down. What is our upside on something like that?
Okay, and your upside with 2 points risk, okay?
Yes.
And basically what you're looking at, you can make money up to 1410. All right?
Well, that's
so
a good number.
1382,
Okay.
so if the S&P went up to 1410,
Right.
then your upside is literally the difference of that. So you're looking at a 28 point upside.
That's huge,
So-
man. That's huge.
Oh yeah, I mean literally you're talking. I mean now that's not your necessarily profit. That's just your potential profit.
Yes.
But I mean you're talking a $1,400 potential profit on a $100 margin, $100 risk, and you cannot get whipped out of the trade.
That's amazing, man. That's pretty cool. I got to get my head wrapped around those spreads. No, that's a great example, man. And what happens here, I mean, by the way, is that you can either buy or sell them. So you can take either side of that, right? That's the bottom line.
Yeah. Not only can you take either side, you can take both sides.
Okay.
You can actually go in and you could buy the spread, the 1380 to 1410 spread, or you go down and you could actually sell the lower spread, so which would be 1380 to 1350. So you can actually do both at the same time. I actually did a couple straddles today. You can go in and you can buy and sell, do a straddle, maybe risk a couple $100. If the market shoots up or down, as long as it covers your cost,
Right.
you're making money.
And, of course, the way the volatility in the market right now is, the probability that you'll be in the money at some point of the day kind of goes up, too. This is pretty neat. Yeah, yeah.
And on this particular trade, if you would have went in and bought this at 1382,
Yes.
and the market basically closed out at 315 around 1388. So
And it's
1382, 1388, you would have made 6 points. So you'd have made $300 on your $100 risk. You would have tripled your money, and that's if you only did one contract. I mean, you could have done 5 contracts, risking $500, and made $1,500.
That's amazing. That's
never worrying about the market moving against you and your risk ever increasing. So you can stay in that trade. You don't have to get kicked out, put more risk up to get back in. You just get to keep going and going and going, and you have all day for it to be right or wrong.
And how long you been trading these products?
How long what?
How long you been trading the Nadex now, this new platform?
I've been trading the platform now for actually coming up on a year here in about a month.
That is so cool, man. Well,
Yeah,
listen.
I met him at the Dallas Traders Expo last June.
Okay.
And found out about the product, and I dove into it, and after a couple months, I just
Well,
all
listen,
over it.
we appreciate you coming on TFNN. We look forward to the education, Darrell.
But,
Okay, man. You have a great one.
hey,
and
it was a
safe
great day.
one.
Thanks for having me on.
Absolutely. You stay right there, folks. We're coming right back.